Alright, so if you're still betting on Bitcoin's famous 4-year cycle to carry us through this bull run, you might be betting on something that doesn't even exist anymore. Because the game has changed. Big shifts in global debt, institutional adoption, and how money moves at the highest levels of power. They've already rewritten the rules, and if you're still playing by the old ones, you might get left behind. So let's talk about what's really going on. First, let's break down the halving. Every 4 years, Bitcoin cuts the number of new coins miners receive in half. Back in 2012, we dropped from 50 coins per block down to 25. That was a huge deal. It cut supply overnight and the price went vertical. In 2016, the reward was cut to 12.5. In 2020, it dropped again to 6.25. And in 2024, now we're at 3.125. And every time that number shrinks, the supply shock matters less and less. It's just basic math. Each halving has half the impact of the one before it. But here's what's changed even more. It's who's buying Bitcoin now. Back in the day, it was retail hype. Regular folk like you and me were just aping in and going FOMO. Pump, dump, repeat. But today, the demand looks completely different. We've got publicly traded Bitcoin treasury companies like MicroStrategy stacking billions of dollars. We've got ETFs funneling billions more. And those buyers, they don't panic sell. They don't time the market. They don't give a damn about crypto Twitter sentiment. They just keep accumulating. And they're not just holding. Some of them are literally pledging to never sell. That's a huge shift because now, instead of emotional trading cycles, we're seeing long-term supply sinks. Bitcoin is being locked up, not traded, not flipped, just held. And it gets deeper. Let's zoom out to the global economy because the halving might not even be the real engine anymore. The real driver? Global liquidity. Here's the deal. Governments all around the world are drowning in debt. As of 2024, the total public debt globally hit $97 trillion. When you add in private debt, we're looking at over $300 trillion. And unlike in the past, governments can't just refinance this at 0% interest. Rates are higher now, which means every time they roll over debt, it gets more expensive. This is what economists call the sovereign debt bubble. Some call it the everything bubble. And like all bubbles, it's gonna pop. So what happens when it does? Governments have two options. Let it pop, triggering a global financial crisis, or, like always, print more money. A lot of it. And when they print money to buy their own bonds, that injects massive new liquidity into the system, which historically sends assets like Bitcoin to the moon. During COVID, the US printed $3 trillion and Bitcoin went from 7K to 70K. That's a 10x. Now projections show that governments may need to print $8.9 trillion over the next few years just to keep the lights on. So do the math. That's why Arthur Hayes says $1 million per Bitcoin by 2028 isn't crazy. But here's the twist. Bitcoin isn't just a bystander in this story. It's becoming a threat because investors are starting to choose Bitcoin-backed instruments like preferred stock from treasury companies over government bonds. And why? Because they yield more and they're backed by an asset that can't be printed. If billions of dollars flow out of bonds into Bitcoin-backed products, it forces governments to print even more money just to keep the demand for their debt alive. So ironically, the more investors choose Bitcoin, the more bullish Bitcoin becomes. That's a positive feedback loop. And Bitcoin treasury companies, they're fueling it. MicroStrategy now owns over 600,000 Bitcoin, worth more than $70 billion, and they're buying more every month. This isn't some meme coin frenzy. This is strategic financial warfare. And here's the kicker. These companies are locking up Bitcoin permanently. They're not trying to flip it. They're not trying to sell it in the next bull run. They're trying to remove it from circulation because the moment they sell, even once, their stock loses credibility. So they double down on the promise, never sell. That strategy turns Bitcoin from a speculative asset into something more like digital gold, a global reserve asset. Less volatility, more demand, and less supply. So now, let's ask the big question. Is the 4-year cycle for Bitcoin dead? Let's recap. Each halving has less impact than the last. Global liquidity, not the halving, is driving the price. Institutional buyers are changing the entire game. Bitcoin treasury companies are creating permanent demand. So yeah, the boom and bust rhythm that we're used to, that might be over. But let's be real, markets are still run by humans, and humans are gonna human. So we might not see another 80% crash, but 40 to 50% pullbacks are probably still on the table. The difference now, those dips might not last very long because there are billion-dollar entities waiting to scoop them up. Bitcoin is evolving. It's not just a trade anymore, it's a strategy. So if you're still thinking in 4-year cycles, you might already be behind. Stay sharp, stay humble, and stack smart. And I'll see you in the next one.